Good afternoon and welcome to today's CFO Lunchtime Live. I'm your host, James Solomons, and over the next 60 minutes, we will be exploring the topic of how to sell into the USA, sales tax simplified. E-commerce is rapidly expanding and now represents 15% of all retail sales in the US. If you're a brand aiming for substantial growth, looking to increase your customer base, drive revenue, and position your brand for the future, now is the opportune time to tap into the US market, where consumers spent $870 billion online last year. In this CFO Australia webinar, you'll gain valuable insights on successfully selling into the US and achieving the American e-commerce dream. So let's meet today's guests. Joining us from Brighton, England, Heather White, Cross-Border Solutions Manager at Avalara, and Connor Kirkland, also from Avalara, who is the Tax Technology Solutions Manager. Thank you for joining us today, guys.
Hi, James. Thank you very much for having us. I noticed you stumbled over my title a little bit. It is a bit of a tongue twister, but forgive me.
All good, all good. Now, look, we're going to start with some introductions. So, Heather, let's start with yourself. Who is Avalara and what is your role there?
Absolutely. Yeah, it's great to be here. Thanks for the introduction, James. So I'm Heather. I am a cross-border solutions manager at Avalara. And Avalara are essentially a tax technology company. So we were founded almost 20 years ago in the US to help businesses initially tackle the US sales tax market. But over the years, we've evolved to have a global offering. And essentially, we help businesses by automating that end-to-end process for tax compliance. So businesses can focus on growing their business instead of sacrificing time and effort and risk, trying to meet the onerous demands of governmental compliance.
Fantastic. And Connor, yes, apologies for getting your title mixed up. So I'll give you an opportunity now to correct that. But yeah, give us an understanding of what your role is at Avalara. And to answer the question, when we have GST here in Australia, sales tax, some people might know, some people might not know. So tell us, what is sales tax in the US context?
Certainly, James. So I'm a tax technology solutions manager. I have certainly stumbled over my own words before saying that. A bit of a long title, but in simple terms, what I do is help businesses when they're shipping internationally or trading internationally to ensure that they are taxing correctly. And a lot of these complications do come when they're shipping and selling into the US. So to kind of answer your question there about GST and the differences in GST when you're selling to the US, US sales tax is very different to what we have here in Europe and also what is in Australia as well. So US sales tax is an indirect tax, which is added on to the sales of goods and services to the end buyer of products and services. So unlike VAT and GST, it's only levied on the final transaction amount. And it does apply to business sales, business to consumer sales, and also business to government sales as well. So typically, have you ever been to the US yourself, James?
I have a couple of times. We've got an office over there.
Okay. So say, for instance, when you buy a cup of coffee over in the US, you may have noticed it will say $2 plus sales tax. Mm-hmm. Now, that is where that final part of sales tax is added on to the transaction. So typically when you get to the till, instead of being that $2, it's $2.38, say, for instance. And that is that sales tax, which is added on at the end of the transaction.
Fantastic. And I know a little bit later on, we will dive a little bit into the different types of taxes. But Heather, a question for you. Do I have to pay sales tax on all of my sales to the US if I'm selling into the US?
Yeah, so I guess that's one of the great things about the US as a target market for new businesses launching, is from Australia, you can selling into the US without having to worry about US sales tax initially. So you can sell into the US as a remote business up until a business establishes something called Nexus. Once you have Nexus, that's when you need to worry about sales tax. So you would then have a requirement to register with the state, to calculate and collect sales tax. and then file and remit it to the local tax offices as well.
Right, I have heard of Nexus before. So do you want to give us a bit more of a breakdown on what is this Nexus? I mean, that's generally, it's a connection, but in the sales tax term or type, how does that mean that you need to be registering to pay sales tax?
Yeah, absolutely. You're exactly correct. It's just that fancy word for connection. So I think it's a fancy Latin word for connection. And it essentially looks at what connection does your business have with a particular state. So there are two most common ways that you can establish Nexus. Firstly, by having a physical presence. So that can be triggered by having, offices, employees, or can be triggered by having stock in the state, whether that be in a third party warehouse, your own warehouse, or a marketplace warehouse even. And each state has its own rules as to what establishes Nexus. So some include, even attending a trade show there or having a traveling sales rep, that might establish physical Nexus for your business. So that's more relevant if you have a presence in the US somewhere. But the second most common way is something called economic Nexus, which is, I think, the bit that's kind of catches people out because it was only introduced sort of 2018, 2019 after a ruling with South Dakota and Wayfair. And it does apply to all businesses, whether you're a US Inc. business, a UK registered business, an Australian registered business, just selling cross-border into the US. And essentially, each state has set its own threshold, and a business can sell into that state until they reach that threshold without worrying about tax. Most states look at the sales over a calendar year period in terms of that measurement, but there are a few exceptions where they look at like your reporting year or a rolling 12 months, for example. And the thresholds are a combination of revenue and or transactions. So, for example, there are states like California and Texas where the threshold is, $500,000 US. So it makes it quite difficult to, to have to worry about tax. But there are other states, there's about 20 of them, where the threshold is $100,000 US or 200 transactions, which obviously makes it very easy for businesses to kind of hit that threshold.
All right. I hope everyone's been writing down their notes because it's already a little bit mind-blowing, which I think is generally the, I guess, the perception from a lot of businesses that are not based in the US. I mean, I know businesses that are even based in the US get this wrong, but certainly for those that are not in the US, and I'm sure there's many online today that would be sitting there going, yeah, this is why we sometimes thought about the US and sometimes been scared, but we'll get on to hopefully a little bit later on some solutions. But Connor, I mean, what is the tax rate for the US?
Well, that's a question we get asked quite a lot, actually, James. And unfortunately, unlike, say, for instance, the UK, there is no flat rate of sales tax. And it's very different to VAT once again. So sales tax actually differs based on the location of where you're selling into and where your customer is actually located. So say, for instance, you can sell in one location in Texas. Say I was to purchase this lovely shirt, which I'm wearing today. It could be taxed at 9% sales tax. And then you could actually drive a mile down the road and the same shirt could actually be taxed at 5%. And this can even occur with two businesses or two locations which are next door to each other. And this is really where you kind of find this complication, and businesses do get a little bit scared when they start looking into sales tax in the US. Altogether, there are over 13,000 different taxing jurisdictions in the US.
Did you just say 13,000?
Yes, 13,000. Yeah.
Okay, 13,000.
So it can be quite tricky to kind of to work these out when you are selling into the US. But just a bit of a shameless plug, I guess. This is what Avalara do, and we help businesses to kind of calculate the sales tax and kind of work out the correct sales tax when they're selling to different locations.
Yeah, and I guess I mean there are some multinational businesses that sell into every state. And I think, as you just said, there's 13,000. So it's more than just states, because there's only 50 odd states in the US. So we're talking local counties and regions that have all got their own taxes. And that's what you're saying in regards to down the road, you could be paying a different rate of tax. Is that right?
Yeah, that's correct, James. Yeah, so you can get to the instances where there's just small villages which get taxed differently to a town next door,
Wow.
and you largely find with foreign businesses selling into the US, they would assume that sales tax is held at a zip code level, or state level, and that couldn't be further from the truth.
Wow.
It's actually at a geolocated level. There's a bit of an interesting story about how these kind of lines developed. Many down to kind of landowner lines, and some areas were sold to and from the different states, and different landowners there. But this has really built in this kind of, dare I say it, kind of fractured system for taxation. So it is important to get it correct.
Yeah. And so on the topic of getting it correct, and there being 13 odd thousand taxes, how often do these 13 odd thousand taxes change?
This is where you're going to love me, James. So these tax rates do not stay the same constantly for years and years. They can change on a monthly basis. And so you will regularly see, I mean, these taxing jurisdictions could be 13,000 one month, could be 13,500 the next month. So
Wow.
it is kind of a fluid scale going up and down, and they're all based on what these local locations need and require. So say, for instance, if they need to be developing in hospitals, say, for instance, could be a hospital tax. The roads are getting too many potholes. Certainly happens in the UK. They increase a kind of transit tax to reflect this. And with this as well, it also brings in the extra complications of tax holidays, which I don't know if you've ever heard of before.
No. Sounds nice though.
It does sound nice, and it is nice, to be fair. But tax holidays basically means that in one area of the country in the US, or several areas in the country in the US, over a certain period of time, certain items could not be charged sales tax and will be tax-free for a certain amount of time. So off the top of my head, Alabama in February, a couple of days in February, there's a hurricane survival generators. They're not taxed. In Florida, school supplies in July and August, they're not taxed. And then in Nevada, in certain times in October, purchases by the National Guard, they're not taxed. So this really shows you the kind of extra layer of kind of complication in this, and the kind of need to try and get this right. So.
I think extra layer is an understatement. Let's call it multiple layers. It's like a lasagna that just keeps going. So then, I mean, when GST was brought into Australia, just actually as I was starting my career in accounting, in 2000, a lot was said about exemptions and things that should have tax and shouldn't have tax. And if it was milk, it was a staple, so there was no tax. And if it was wheat, it was no tax. But if it was processed, it was tax. Surely in America, it's just, I mean, you just gave some holiday exemptions there, but surely everything's just taxed. Is that safe to say? Do you pay tax on everything, or are there things that get off, full stop, to make it even harder?
Yeah, so that's an excellent question, James. So whilst tax does differ in every region in every state, you'll be pleased to hear so does the taxability of every product and service as well.
I knew you were going to say that, Connor.
So in certain states and certain areas, items that you sell, they might be tax exempt in one state, and then they might be completely taxable in the other. Off the top of my head, oxygen supplies, if they were selling into medical facilities, say, for instance. In Missouri, oxygen supplies are tax exempt. However, if you were selling these into Illinois, where Chicago is, these would be taxable. So the taxability of products and services range dramatically in each and every state. And it can also be determined on how your product is sold. So a little funny pointer on this is hot sandwiches in California are deemed to be taxable, but cold sandwiches are not. So and this changes throughout the US for different items. And actually, you mentioned something really important there, James, about exemptions. And that actually leads me on nicely to business sales in the US. So say, for instance, if you were selling here in the UK, you can reclaim VAT on the items you purchase for your business. As long as you're well VAT registered, that is. But trading in the US, business to business, is very unique compared to many other different countries in the world. So how these kind of purchases work in the US is that businesses always charge sales tax to the end customer unless the end customer has what is known as an exemption certificate. I don't know if you've ever seen exemption certificates in your own line, James.
No, I haven't seen them.
So exemption certificates, many businesses can get these for many different reasons. Now, primarily, these are resellers that have these, and that's the most common way you will see an exemption certificate. And this could be, resellers can be anything from small salons, say, for instance, to large superstores, which you may sell into yourselves. But it can also be religious institutions, educational institutions, medical facilities. Exemption certificates can be given to businesses in the US for many different reasons. However, what you'll be pleased to hear, James, is that it's your responsibility as a seller to collect exemption certificates at the point of purchase. You need to ensure that they're valid, you need to ensure that they're in date, and you need to ensure that they're processed effectively, kept on record, and that they're also made as reported as part of your return back to the state authorities each and every month. So this isn't, once again, an extra layer of complication which is added on when you're selling into the US.
Yeah, I'm gonna hold that thought of filing because I've got one more question for you, Connor, and you know, as everyone knows, at Lunchtime Live, we have some questions already pre-prepared to get through the session. I hear, or I'm reading about an exemption, Snickers in Indiana. An exemption for Snickers bars. Is that Snickers bars in Indiana?
In Indiana. Yeah, I think, Heather, do you want to pick up on that?
No, so it's taxable, but or it's exempt, but a Kit Kat is taxable. So yeah, one of them is taxable and one of them is exempt.
Can you explain to the audience why it's just one of those things?
Yeah, so it's the category that it falls into. So I think in the UK we have this famous story around Jaffa cakes. So whether it's a biscuit or a cake, and you know, depending on the type of purpose or category that it falls into, determines the taxability. So it's the same theory as the Jaffa cakes in the UK.
So yeah, it's a the Kit Kat might be a biscuit, whereas the Snickers is a bar. Okay, I get it. Yeah. Okay, so we're all mind blown. We're all mind blown of the number of taxes. They change every month, 13 odd thousand. I mean, we do have similar things here in Australia. You know, I was looking at my insurances again, just literally before we came online, and you know, we've got a fire levy to help rebuild from bushfires. So there are levies, but they tend to be levied in other ways. You know, in Australia, it's just the GST is the, you know, that sales tax equivalent. So having heard all of that, again, and you mentioned this before, Connor. So Heather, how do we file our tax returns? How often do we file them? How many of them do we file? And who do we pay the money to?
Yeah, so you won't be surprised in my answer that it differs per state. So yeah, I mean, as I said, the US is a huge opportunity. You know, when you start selling into the US, you don't have to worry about this. So if you are, you know, cross-border and you're just starting up, then absolutely take the opportunity for the US. But once you do start you know, generating some serious revenue, then yeah, you do need to worry about sales tax. And yeah, once you have Nexus, you essentially register directly with the state. And then at that point, you're given a filing frequency. So that will vary per state. Commonly it's monthly or quarterly, but it will be depending on the state, and it is quite often revenue driven as well. So if you're a, you know, really high revenue business, then you can expect to be filing more frequently. And I mean, it's kind of a good problem to have, I guess, if you're, you know, you're being really successful in the US and you're generating some significant revenue. But yeah, there are also some weird and wonderful scenarios where you're required to file monthly, pay quarterly. And then if you are generating enough revenue as well, you may also be asked to file at district and jurisdictional level. But essentially, if you wanted to manage your returns yourselves, you log on to each of the state's websites with your electronic filing ID. I'd assume in a very similar fashion to, you know, how you manage your GST. And you would complete the relevant tax returns forms. So obviously each state has different formats and filing deadlines, and some of them are quite lengthy. So the California tax return has around 300 lines of data, and is about like 13-14 pages long. So
I've done one of those. Well, I do one of those each year. I do one of those each year. Yeah, it's not
Yeah.
easy. It's not easy.
No, and you obviously have to attribute which part of the, you know, 8.25% tax was state tax, which was county tax, which was city, jurisdictional, etc. So obviously a lot of businesses do use automation like Avalara to streamline that process. And one thing I would say on filings is it's really important, like everywhere in the world, to file on time, because the US, especially in sort of some of the bigger states, that, you know, Texas and California, you know, their late filing penalties are quite significant. So if you file like a few days late and up to about 30 days in Texas, it's like a 5% penalty. But if you file over 30 days late, it's a 10% penalty, which, you know, if you're generating significant revenue, or, you know, either way, every kind of penny counts. So definitely important to file on time.
Yeah, no, absolutely. You know, in the income or the corporate tax side in California, the file late as an international owned entity can be a $50,000 late fee. They don't muck around. They do not muck around. So you're saying a program like, or a platform like Avalara can lodge all 52 states. It can lodge all 52 states forms and county forms. Can do all of them. You know, we're not having to run off. Okay.
Yeah, absolutely. Yeah. And although there is the 50-ish states in the US, only 45 of them have sales tax regimes. So there are 5 states which are commonly known as sort of the nomad states, the Delawares, which a lot of businesses will be registered in, where you don't have to worry about sales tax. But yeah, absolutely, for the states that have a sales tax regime, Avalara support with automating that for businesses.
Okay, so we've sort of getting towards halfway, and we've gone through different types of taxes, frequency, all that stuff. Connor, what's the cost of getting sales tax compliance wrong? And it seems like it can be very easy to get wrong.
Yeah, good question, James. So getting sales tax wrong, without trying to be doomsday and try and really kind of scare people. I mean, Halloween's just been a couple of weeks ago, but getting sales tax wrong can be disastrous and can have dire consequences for your business when you trade in the US. So different forms of non-compliance that Heather and I have both seen is the most common one is not registering after breaching Nexus. So you've hit one of those sales thresholds and you've not registered, and then not collecting sales tax beyond that, not filing tax returns because of that, and then also not collecting exemption certificates, which I discussed previously as well. However, we have also seen customers in not being compliant by actually collecting sales tax and not doing anything with it.
Yep.
Now that is deemed in certain states to be classed as fraud.
Yes.
So I would certainly advise, well, recommend to anyone watching this call today that if they are collecting the sales tax but have not registered or have not filed any returns, to urgently seek some help with that, because your businesses may be in trouble with that. But all these forms of non-compliance can result in the risk of state audits. So the state authorities would come to you as a business and ask to kind of see your records and your sales. And once you're audited by one state, this usually has a knock-on effect, and you will be audited by other states. And with this, a lot of businesses would assume that it's not only you pay back the taxes that you owe. Well, just like Heather was saying before, that every state is slightly different. This also holds true with the penalties that every state can hold you accountable for. So they would charge you penalties and also interest being applied on the taxes you owe. So some states can apply interest of over 50% on what you already owe. So if you've been trading in the US for over 10 years, that could get quite costly. And some states have different look back periods for this. So they could base it on the past 5 years that you've been trading. However, when it comes to audits, and if you do get caught, usually there is an infinite look back period. So if you've been trading for 10 years, once again, you could have to pay the tax back for all those 10 years, penalties being applied on top of that, as well as interest being applied to these 10 years. So you can really see the kind of risk that this can bring. Not to mention there can be lawsuits from state authorities as well. And really, getting tax wrong, this could really put your future US business plans in jeopardy, and it can have a serious toll. So really, my main ask for anyone that is watching the call today is to ensure that you are getting your sales tax done correctly. And if you have done any of these things, or any of these things maybe ring the alarm bells, please ensure that you kind of seek help with these. So.
Yeah. How long does it take? I mean, you say, if you're on top of your books and you're taking the advice, I mean, how long does it take to get registered in some of these areas?
Excellent question, James. Excellent question. So I'd say the registrations, they differ per state once again. So some registrations can take just a few days to do so. However, some can take several weeks to complete registration. Believe it or not, some registrations still require physical mail and need to be sent as an application out. So please do ensure that you leave plenty of time to register when you are due to breach your nexus. So this will give you the best chance of ensuring that you do stay tax compliant, and then you will be ready to calculate and then file your returns when you do surpass that nexus threshold.
So I just want to sort of hold on to something there. You said we're talking about different areas, different states. That Heather or Connie, you can answer this. Is it one form, and is there a form with 13 or 50 odd different states, and you tick the box and away you go? Or are you having to lodge each form individually for each district, county, and state and federal?
Yeah,
Okay.
it is.
Oh, okay. Yeah.
Each form is different per state. So each different state will require different mandatory bits of information. I mean, the basis, the foundation of information is going to be the same, but then there are forms which for particular states have an extra 10 to 12 required bits of information that's not actually needed in other states to get registered. But yeah, it is a per state registration format. If Avalara were to support you, you just fill one form that has all of the fields that are relevant to the states that you're getting registered in, and then we will decipher that information and put it in the relevant formats and send it off.
And I was going to ask that question. You've just answered it. So certainly, again, using tech to do the heavy lifting, Avalara can obviously help streamline that process and obviously help to save some of that time. That's good.
Yeah,
that is good. You touched on getting it wrong, Connor. and the historical compliance and the indefinite look back period. I'd say you touched on it. What do you do? I mean, do you front up? Do you turn up with all your dues and go, I'm sorry, and hand it over? I mean, what do you do if you've got historical issues?
Yeah, so if you've breached Nexus in the past and not yet registered, and any of those points that I mentioned previously, you would be deemed as non-compliant. And how long you have not been registered is really the key behind that. So if we are talking, let's say about a month, usually state authorities will accept this and they'd be willing to kind of proceed with that. However, in that instance where I was speaking about you've been selling into the US for years, then and you've breached Nexus several years ago, this would be serious non-compliance. And with that comes that risk of audit, penalties, and interest, which we previously mentioned. However, there are ways to reduce your risk, and Avalara can help with this through VDAs, so voluntary disclosure agreements. So a VDA is a binding agreement between the taxpayer, the business, and the state. And it's designed to encourage compliance with the state tax laws. So VDAs mean that taxpayers can proactively disclose their prior tax obligations. Like you said, James, you turn up with your hat and you say, I'm sorry to say,
Don't look me up.
Yeah, I'm here, and this is what I owe. But
I'm not bribing. I haven't got a wad of cash. It's taxes that we've worked out with you. Yes.
Yeah, that's it. But with the VDA, you would then pay what you owe, and you vow to comply with the state tax laws moving forward beyond that. So just like you said, it's like a great apology. But with these VDAs, it provides some audit protection against taxpayers. So if you were to kind of move forward with this, the likelihood of you getting audited is going to be significantly lower. It can reduce or completely waive penalties in certain states. So that would be a huge benefit to anyone that's been trading for several years. But most importantly, it actually limits the look back period per state.
Right.
So as I mentioned previously, there can be an infinite look back period in certain states. With a VDA, typically states will just look back at the previous 3 years or the previous 2 years. And with this, you can really see the benefit in kind of moving forward to a state and getting compliant through a VDA. And depending on the state, VDAs can still be accepted if you have been audited. However, there are still a risk of penalties, interest being applied for these if you have been. So really, to kind of take it to square one, I think really what is key is just ensure that you are registering as you are about to breach a Nexus threshold, and start filing those returns, start collecting the sales tax, and you will be in the best chance of being compliant in the US.
And certainly, if you find through your own governance and you check in and you find you have breached, there's no delays. It's doing a VDA, because what you're saying is, get audited, you may not be able to put one in, and then they've got that ability to charge the penalties and interest and look back as far as they think into your records, which no one likes an audit. Certainly not going back into to periods that are long gone. That's some good advice. Again, there's been so many great tips today. I'm already envisaging some level of an article, not one that'll be advisory or more advisory than direct, and it's obviously going to be for everyone to look in their own areas and get their own advice, but certainly great things that we could get into some level of sort of cheat sheet, if you like. Now, I want to sort of change gears a little bit as we get into the last part, and we're going to talk about 2 ways to be obviously selling into the US. So Heather, let's say I've got an Amazon account. I'm selling, I don't know, Vegemite or Akubras into the US. I mean, Amazon does everything. Do they handle the taxes as well? Isn't that a flow through? Don't they cover all that? Or am I still having to manage the nexus and register and all that sort of stuff?
Yeah, no, absolutely. And it's a really, really good question. And I guess a common misconception, thankfully, for the first question that you've asked me, I'm able to say it is actually a lot easier to manage your tax obligations if you're selling on Amazon. So yeah, thankfully they do the calculation for you, and they also remit the sales tax to the local states as part of the marketplace facilitator legislation. However, the bit where that may differ is whether you're selling that Vegemite from Australia into the US, or whether you are actually holding stock in an Amazon FBA warehouse. Now, if you are holding stock in those Amazon FBA warehouses, wherever you hold that stock, you would have physical nexus. So, you know, given Amazon's model, you know, they will spread that Vegemite far and wide to make sure that they can ultimately achieve a next day delivery for their customers. So it can mean that the FBA model does trigger quite a physical presence for a lot of businesses. And if you are just holding stock and just selling on Amazon, as much as the calculation and remittance is taken responsibility of, you may still have a reporting requirement, so registration and reporting requirement as a minimum. Or if you are also selling on your own platform, you know, you may be doing a couple of $100 of sales a month, but because you have physical nexus via Amazon, those sales that you're doing on your platform are taxable. So you may need to think about calculating and collecting tax at a much earlier point than if you weren't holding stock there.
Okay, so Amazon doesn't solve all of our problems, although it is very helpful. So staying with you, Heather, in terms of those cross-border pain points, what for business shipping into the US, and you know, in your prior life, you're very much involved in this, you were saying before you came online. I mean, what are some of the challenges they face? Deliveries, duties, taxes. You know, what are those cross-border pain points that the Aussie businesses can expect?
Yeah, no, exactly those. They're the kind of common ones, I guess. But I mean, the US, outside of some of the challenges, is such an incredible market opportunity for businesses, especially Australian businesses with you know, the strength of the Australian dollar at the moment, and given the sheer size of the population, and the fact they have much higher disposable income than a lot of other markets at the moment. You also have the advantage of no language barrier. So, you know, the customers in the US can absolutely understand what you're selling and you know, the product that you're selling. So it is easier to be successful in the US than some of the other markets. But one of the main challenges will ultimately be, you know, getting your product in, so shipping, whether that be shipping costs of getting goods into the country, delivery speeds, given, you know, they're used to their Amazon next day deliveries, or the complexities of duty and tax calculation. Again, having said that, and on a positive note, the duty and tax on the duty and tax calculation side, each country has a de minimis value at which point an order can go up to without attracting customs duties and taxes. And the US was increased a number of years ago to $800. So if you are selling into the US from Australia, you know, you can sell up to the value of $800 per consignment without worrying about duties and taxes. The US obviously has a big kind of luxury market, I guess, with that, you know, extra disposable income. So if you're selling over and above the $800, then yeah, you need to factor in duties and taxes.
And so, Connor or Heather, do I pay those taxes on the way in, or does the customer pay them when they receive them? And I know I've received some packages from other countries, maybe the US even, and I've got a call from our local customs going, "You got to pay some taxes." So who's paying those on the way into the US?
Yeah, I can take this if you want, Heather. So when it comes to actually the duties and taxes being applied at the point of delivery, this is really based on how you as a business wish to sell your products. So typically the kind of key shipping terms are DAP, which you may have heard of, and DDP as well. Yep. So DAP, delivered at place, was also known as delivery duty unpaid. And that's where the taxes and duties are left with the end customer. Now, if you want my own personal opinion, I think this is in the modern world, I don't believe this is the best way to really trade with customers nowadays. I think it creates a bad customer experience. So when you are sending this, the customer is left to pay for these taxes and duties. So with this, it can cause delays on important products, and the customer will need to pay the additional fees on delivery for actually getting this product delivered. So if you think yourself, James, just like when you just described it, no one likes it when a customs agent or say a carrier rings you up, DHL, UPS, FedEx, ring you up, James, we've got your shipment here, but we need you to give us an additional $150 for delivery. No one really likes the feeling that they have to spend more money to get a delivery. So with this, a customer can reject the shipment, and then it's then the point of yourselves as a business to then pay these return charges. So not only is the customer annoyed that they have to pay additional fees on top of the product they've already purchased, but then they also reject the shipment. Once again, you have to pay for these return shipment costs. So that's why I don't really like DAP. However, DDP, delivery duty paid, aka the right way in my eyes, it provides a streamlined customer experience where the customer pays for taxes and duties up front. You do see this a lot more nowadays. So at the point of checkout, taxes and duties will appear at the point of checkout. And with this, it can significantly reduce the delays, so ensures that products will get to your customer quicker. As a result, you have a happy customer because they have nothing additional to pay at the point of delivery. And most importantly, you have a better chance of a successful delivery first time. You don't want to be wasting the time with your customer service agents on arguing with customers about the duties that they have to pay. So definitely, I think DDP is probably the best way for that. Does that answer your question, James?
Thanks, Connor. Yes, that did answer the question. DDP, DAP, very easy to get confused. Probably why they changed it from delivery duty unpaid from delivery duty to delivery at place, because it's so similar to delivery duty paid. I'm sure people would conveniently get that wrong. So, Heather, then, can you run us through how are these duty rates calculated? Because if they're anything like the sales tax rates, I'm sure they're not easy.
No, they're not. I mean, the good job is it's not your responsibility to calculate them. So as a business, you get off that element. But customs authorities will ultimately, calculate the relevant duty or taxes to be charged on a shipment that's crossing the border. And the duty rates will vary depending on the product that you're sending and the commodity code of the item. So an item with a different purpose or product composition, depending on what the item's made of, for example, also with a different country of origin, where that product's manufactured. All of those elements play a part in terms of how we calculate or how customs calculate duties and taxes. So when we look at HS codes, most people refer to the kind of globally recognized 6-digit HS code that each product has. However, when you ship internationally, each country will add on an additional 2 to 4 digits to make that code country specific. And that generally is based on those things that I mentioned before. So, the end purpose of that product, the product composition, for example, but the country specific HS codes are what determines the duty rate. So really important to use those country specific HS codes so that you're not overpaying on customs duties and taxes. Because if you only have the 6-digit HS code, then customs will look at that and say, well, we can't, we're not here to give that 6-digit HS code the granularity that it needs. So we'll just charge the highest rate of duty that could be applicable for all of those scenarios. So in my past in logistics, and obviously my time at Avalara, I've seen examples of customers overpaying duty by like 20+%, which, if you're doing a delivery duty unpaid or duty at place model, you're stinging your customer. But equally, if you're a business and you're doing a DDP model, you're just kind of eating away at that bottom line, overpaying charges based on the accuracy of your paperwork.
Yeah, absolutely. HS codes. What does HS stand for, Heather?
So it's harmonized. It's a harmonized commodity code essentially. So it's
Gotcha.
it's as I said, it's the globally recognized code for products. So for example, a 6-digit code would tell me that an item is a leather shoe, whether we're in Australia, the US, the UK. Right. But then, as I said, each specific kind of 2 or 4 digits would tell me that actually it's a medical shoe or it's a woman's leather shoe. And it kind of, will break that subsection on. But I think, Connor, obviously you were also in logistics. And I know you probably had a few examples of when your customers were overpaying, or I guess examples of how important it is to get it right.
Yeah, we love stories, Connor. Tell us.
Well, yeah, thanks, Emma. So, yeah, I think certainly from my time in logistics, alarm bells should be ringing to businesses that are on this call today. If you speak with your shipping department and they say, "Oh, we use the same 6 digits for all our products," or they use the same 6 digits shipping internationally, or they say, "Oh, where did you get this HS code from?" "Oh, we've just been using it for years." Alarm bells should really be ringing at that point, because the unseen costs of logistics that businesses never really look into can be terrifying, really. So, I mean, a good example, and you asked for a story. Yeah. One of the ones that I used to work with in my previous time in logistics was a car manufacturer that I'm sure many people on this call today will know of, and many people may even own one of these cars. And I used to work with this firm, and they were actually importing specialized car radiators from Australia, actually, so topical for today. So they were bringing these over to the UK, these specialized car radiators. However, over a year with ourselves, their duties went up by about 500k in pounds, and they believed it was our fault as a carrier, that we were overcharging them on these duties and we were increasing the taxes. So I really went away and I started delving into every single one of their shipments, trying to look for patterns, trying to see what actually might be happening. And then I found out the reason why they were getting charged such a heavy amount on their duties. So by looking into it, every time they imported these car radiators from Australia, in an effort to be eco-friendly, these car radiators were actually in expensive packaging. So the business actually packaged up this expensive packaging and sent it back on a flight back to Australia. Now, what that says about being eco-friendly, I'm not too sure. However, not only were they paying the return costs of sending this packaging back across to Australia again, but they were labeling the goods wrong. So instead of shipping these empty boxes and labeling them as empty boxes, they were being shipped back as luxury car radiators once again. So these empty boxes were getting charged the same amount of duties as a specialized car radiator. And honestly, you wouldn't believe how common this is. And these kind of unseen costs that just sat in the back of supply chain, in your supply chain, in your logistics department, they can be really, really scary. So everyone on the call today, here's my plea to you all: have a look into what your goods are getting sent out on with your HS codes. and how you're actually shipping these goods. Just have a little look into that level of detail, because you may never know. You might actually find that you are losing a little bit of money or quite a lot of money with the way you are shipping your items, and you might be able to potentially increase your profits moving forward by looking into such a simple little thing. So that's my plea for today.
Yeah, that's it could be, and it can be small, but it just adds up over time, and once it's gone, it's gone. Now tell me, I mean, you see, the big blue jackets, FBI, IRS, but I see the customs ones everywhere. How aggressive are the customs departments in the US in getting their money? I believe they don't like not getting paid correctly. Is that right, Heather?
Yeah, absolutely. Yeah. So yeah, obviously in my experience in logistics, there were many customers that tried to cheat the system with that de minimis value. So a customer orders £1,000 or $1,000 order, they ship it as 2 separate boxes at $500. They avoid, catching or collecting any duties and taxes. I did have an example where customers caught a customer of mine, gave them a slap on the wrist, educated them, took the, I guess, initial thing that, they may not have understood this, but they continued to do it, and they caught them and stopped every single one of their orders going into the US. So everything just got held.
Wow.
And when it comes to customs, trying to get things released was very, very difficult, because it wasn't a priority for them to resolve their issues, to communicate with them. They were like, we told you, you didn't do it correctly, everything's on hold. And then that customer was left with no ability to ship into the US. Like, their revenue stream got cut off overnight. And ultimately, they had lots of unhappy customers where all of their products were stuck in customs. They kind of managed to get it resolved eventually, but there was a good few weeks where they weren't able to sell to the US, and they were in quite a bit of trouble. So
that's right. I liken border protection in the US. You go through, even if you're transiting through, you just eyes down, do as you're told, don't make a fuss, answer all the questions with sir at the end. It's the same with customs, and I think anywhere customs, you piss off the border security and the customs on the way in, they're just going to let your stuff sit on the docks, and there's literally nothing you can do about it. So they have their ways and means of effectively getting you to do the right thing. Well, look, it's been an excellent discussion today. We've covered a lot of ground, and if I could see all the audience today, they'd all be scribbling down, and even I was writing some things down as we were going along. But I want to firstly thank our panel for today, but I want to end for one final question for each of you. First one to you, Connor, and you've been giving us your recommendations along the way, which I'm sure people again have been jotting down. But to summarize, what are the 5 main steps for selling into the US?
So the five main steps for selling into the US is, as a step 1, research your tax and duty requirements. See if your product is taxable. See potentially how much tax you may owe selling your product in, and then also duties as well. We don't want another situation where you're selling in empty cardboard boxes and getting high duty rates of car radiators. So ensure that you're looking into these. Step 2, once you have breached Nexus, ensure that you register with the authorities. Make sure that you are staying tax compliant there. Step 3, once you are registered, ensure that you are calculating the correct amount of tax and duty. So you are ensuring that you are passing that back to the customer effectively. Step 4, track and manage exempt sales. Once again, business-to-business sales in the US differ from Australia and the UK. So ensure that you are tracking your exempt sales there and collecting these exemption certificates. And step 5, finally, and the most important one, make sure you are filing and remitting these taxes back to state authorities. It's all well and good calculating it, registering and collecting these sales taxes, but ensure that you are filing and remitting these back. That is extremely important, and make sure you are doing that.
Absolutely. 5 fantastic tips. And to round us out today, Heather, how can Avalara help businesses selling into the US?
So yeah, we support with taking all that guesswork and the manual work out of tax compliance. So we've got a huge range of different products that can help businesses, whether it be with tax research, with getting registered, addressing historical compliance. And then we have a tax engine called Avatax, which ultimately automates that end-to-end process. So we would calculate the correct amount of tax when you're raising an invoice or when the customer's in a checkout. We take into consideration the 13,000 taxing jurisdictions and the rates changing every month. And we also look at the taxability of the product as well. So we can work out if you're selling a Snickers or a Kit Kat. We then also help businesses keep their exemption certificates kind of up to date and make sure they're valid. We close any compliance gaps in that space. And then, as Connor said, the most important bit is paying the tax to the taxing authorities. So we automate that process as well. So we will file your returns for you and remit your payment to the local tax offices, as well as the taxing jurisdictions as well. And then outside of the US, Avalara support businesses with global compliance. So we've got outsourced, in-source models. We help businesses comply with the ever-evolving e-invoicing mandates, which are another whole topic of their own. They're obviously being introduced into lots of markets now. So yeah, if you are managing tax compliance at the moment and it's costly or painful, you think you might have compliance gaps and you're filled with a bit of dread when you talk about the subject, then we'd love to help. But also equally, if you're not really sure of your tax obligations and you just don't really know where to start, then Connor and I would love to schedule some time in, jump on a call. We're not tax advisors, but we can sort of help you navigate the nexus side of things and ultimately how Avalara can support with you.
Yeah, fantastic. And we'll certainly share your details in the follow-up email coming to everyone later today. But certainly, it's been fantastic to get just an insight, and we've only, just scratched the surface on what it takes just to get the sales tax compliance right and the duties right. Fortunately, there is solutions like Avalara out there that can help to take away some of that pain. And so therefore, like many businesses, the US can be a fantastic opportunity, can also be quite scary, but with the right support, I'm sure the people and the businesses with the right products would certainly do well. But that does bring us to the end of today's Lunchtime Live. Again, thanks to our panel, Heather and Connor. Thanks to both of you for getting up a little bit, staying up late to be with us tonight. Today, I should say, tonight for you guys, and sharing all your thoughts and experiences with us today.
Thank you very much, James. We've really enjoyed it, and it's been great to meet you. And thank you to CFO Magazine for having us.
Absolutely.
And thanks to Avalara for their support with today's event. And thanks to everyone who's tuned in today from around Australia and New Zealand. A full copy of the recording will be made available later this afternoon and emailed to you. But until next time, I am James Solomons, and I look forward to seeing you on the next CFO